Yo, what it do, YouTube? It's your boy MB. Today is Saturday, March 30th, the Sabbath day of Easter weekend. So shout out to Jesus, and I'm ready to do this week's number one setup. Yesterday, because the market was closed, it felt weird not putting out a video. Kind of felt like a slacker. But anyways, my goal for these videos is to show you the number one setup of the entire week, where if you're just a beginner trader or you trade full time or someone that just wants to make money on the side, these plays are super easy to spot and offer great rewards with little risk. I do like to show setups that I actually took during the week, but sometimes, like this play, I just missed the setup. And so with technical analysis, a lot of people will say, oh, hindsight is 20/20. But these patterns repeat themselves over and over again, and they're easy to spot in real time. You just have to know what you're looking for. So I still have a lot to learn, but that's why I like making these videos, because it helps me spot these trends in real time. That way I don't miss the setup, the next time that they play out. But with all that out of the way, let me get into the best play. So this play happened on Tuesday, March 26th, and this week was extremely boring because it was a short week due to Good Friday, the market being closed. So I could show you something like this and be like, oh, if you had bought right here, the market rallied in 35 points. But I don't feel like this play was as predictable as the one I'm going to show you. So let's begin with the context on a 15-minute chart. So starting on this day, Wednesday, March 20th, we had this nice rally, and that was off of FOMC news. So Jerome Powell and his interest rate decision, the market really liked it, and so we pumped up, and then for a while, we kind of held this area as support, and so this was my area of interest. So we had broken this level, and I've been waiting for us to kind of retest this area. So we break it here, we get back above it, we break it again, and so this was just an area of significance where I wanted to see if it would act as resistance. And so now zooming into that Tuesday morning around 4 to 7 in the morning, you can see that we never really got any solid closes above this area of interest. We had this 15-minute candle that closed above it, but right after that, we get rejected, close right below it. Here we can see at 6:45, we approach this area and we never get another close. And so this all happened pre-market. We retest this area, we get rejected. And so honestly, if I was up at 6 in the morning and I had seen this, I probably would have just taken a short right here. This honestly would have been a good setup, but I like to show plays that happen during the market session, because not everybody is awake at 4 to 7 in the morning to see this stuff playing out. But this is kind of our first clue leading into the sentiment of the day. We break out of this downtrend, but you can see that we're rejecting this area of support. So it seems like the market isn't totally ready just to start breaking out and going up higher. It looks like we want to come down lower and maybe retest this trend line. So you can see at 7:30 we have this giant red candle, and then we can start to consolidate sideways. And so with this consolidation, it just looks like a nice bear flag that's forming. So you have the start of the pullback, we reject this pivot point, all these trend lines, VWAP, the 30-day and the 9-moving average, and we just can't get a strong push back to this high. You can see this candle here, it actually broke out, but then ended up getting a really nasty rejection. And so, from about 8 o'clock to 11, 3 hours, we just can't make a move higher. And so it just seems like there's not a lot of strength. So now let me show you where the best entry is. So going to a 5-minute chart, you can see the rejection at this area of interest. We had the strong sell-off. We had the pullback. So I'm going to start with the Fibonacci retracement tool and place it at the top of this rejection, and then the bottom of this wick at 8:20 in the morning, and then extend it over. So you can see starting from 8:20, we never get a close above the 50% level. So we have an area where we test it here at 9:05, that gets rejected. We get rejected here at 9:15. This candle actually broke through the 50% mark and looked like it was going to go back to the highs. But then, like I said, it ended up closing below the 50% mark. Same thing with this candle here, and then this candle right here at 9:25. So honestly, you could have taken it right here. This probably would have been the optimal spot. You would have had several confirmations that we're not closing above the 50% mark. So this is ideally your entry. You get in at 9:25. There's a strong push down from 93 down to 85. So I like to go for 10 points. So I actually wouldn't have taken profits here. It would have gone back up. And if you didn't get in here, it offered you a second opportunity to get in here. You can see same thing around 10, 11 in the morning. We rejected the 50% mark again for about 15 minutes. We had this giant push up, couldn't get a close above it. This candle in the middle couldn't get a close above it. And then this candle here at 11 rejects it one more time and then gets sent back down. So here are your two entries. You could have gotten one at 9:30 in the morning and then around 11 o'clock in the morning. So your entry is right here at 52.93. So although I like to go for 10 points, because this is a bear flag, it's considered a measured move trade. So what that means is you take the top of the pull to the bottom, and that becomes your target. So you move this over and place it to where your entry is at 52.93, and the bottom of this pull becomes your target. So now you have a target of 52.78. So from 52.93 down to 52.78, this becomes a 15-point move. And as you can see, from 11 o'clock, it ended up getting there around 2:30. So this play did take a while to develop, but if you had entered up here at 52.93 at the 50% mark, you would have never been in the red. This trade would have worked in your favor the entire way. So you would have just had to have the discipline to actually hold this trade throughout until that target hits. Of course, this play ended up going a lot further, and I actually had some targets down around the 50 level. Now, there was this pivot point down here at 68, and this was an area of interest as well. You can see that we found some buyers over here on Monday around 6 in the morning at 52.72. So although the target was right here at 77, you could have targeted the low of this demand area and caught another 5 points. So this 15-point play could have honestly been 20. And then if you end up taking it a step further, you can see that we broke out of this downtrend, and ideally what you want to see is us bounce off of this downtrend. If you're bullish, you want to see a retest of this downtrend and then to continue to push forward. But then once we got below the downtrend once more, it kind of signified that, okay, maybe we're not going to keep pushing up higher. So you honestly could have just kept holding this trade and milked it for the entire move. But that's not likely. I mean, if you're entering up here at 93, the chances of you catching a 30-point move, yeah, there's some people out there that are really good at holding. But if you're like myself, then you like taking your profits off the table. So I think the most that I would have held for this move was 20 points. So I'm not going to sit here and be like, oh, you could have got 30 points. Because it's highly unlikely you would have had the best entry and then the perfect exit to catch those 30 points. So there you have it. That's the best play of the week. Like I said, there were only a handful of plays this week. I only took like 4 or 5 trades this entire week. It was super slow. Unfortunately, like I said, I missed this play. But it was super obvious, and as soon as I was reviewing the market end of day, I was like, why didn't I catch this? And it all stems because I didn't have this line drawn on this chart. I was on a different layout, and so once I switched to this layout, I saw this line drawn, and I was like, dang, why did I delete that? It was a perfect area of interest. I should have kept it open. And so that was just my mistake, and so just got to learn from those mistakes and try not to repeat them in the future and work on being a better trader as time goes on. That's pretty much it, y'all. Hope y'all caught this play. Hope y'all learned something. I will catch you guys on Monday. All right, I love you.